We are discussing the crude oil prices, which have continued to be volatile. But, the markets really are getting stressed ahead of the May 19th expiry. And we have seen there is a history to go by. And there also is the US CFTC report, which has warned the possibility of a negative prices yet again ahead of the expiry. The CFTC report says that they are urging the investors and traders to be cautious, to be prepared. And there's a warning of extreme volatility, low liquidity, and possible negative prices yet again. What we saw during April 20th was that the crude prices went down all the way to negative $40, and MCX reacted with a negative 2,880 rupees here as well. Well, that case is still on into the courts in Indian markets, but a lot of losses is what the crude ETFs globally also put out with the kind of volatility and lower volumes that we saw in case of the crude oil prices. Joining us to talk further about that is Peter McGuire with XM Australia. Peter, hi. The CFTC report and the CME raising the NYMEX maintenance margin by nearly 20% ahead of that expiry is clearly preparing itself for the markets for yet another, wild ride.
Well, exactly, Manisha, and good morning. To come out and, paint the picture like this, not unusual, I think, from a margin requirement to raise it 20%. I was a little bit surprised. I thought they may have even made it higher. But the other side, of course, is negative territory, forewarning, I suppose, forearming people to, a little bit of a reality check. We were at minus 38 plus last month. It can happen again, and to all the traders to be very much aware, because you just don't know what can actually transpire, and the news coming out is certainly damning. So, no one can forecast what's going to happen, but it's going to be one interesting ride, to say the least, Manisha.
Well, absolutely, Peter. In the Indian markets as well, MCX is where the crude is traded and is the most traded commodity for that matter. We have seen the margins go up quite strongly. So when I look at CME, they had raised margin by nearly 18% on 24th April, and we are looking at yet another 20% happen less than a month there. Yeah. But what is your sense on where the crude prices could be headed if you look at the fundamentals?
Well, if you look at the fundamentals, I'm going to say after next week, after expiry, because what happens over the next couple of days, no one really understands the volatility swings. You've got a weekend involved there as well, so you've got the market shut. So, next Tuesday could be a very interesting day, to put it mildly. After that, there's no good news. There's nothing out there to really, ratchet things up. I listen to the likes of Stan Druckenmiller. I listen to David Tepper. We're understanding what the situation is globally. So from a demand side, it's very, very, very weak. OPEC are, scratching their heads in disbelief. So I think you're possibly still going to be range bound. I can't see it breaking out to the upside in the short run. And I'm still convinced in my own mind, Manisha, it's a $16 to $22 trade for WTI. And for Brent, I think it's overvalued at the moment with the current numbers that we're seeing. I think there's further downside. There's not a good picture out there. The news coming forward is one of bewilderment and absolutely catastrophic. From unemployment numbers, we got ours released today in Australia, underemployment numbers, activity rates, all of these sort of headlines are just so damning. So that's a global phenomenon, and it's going to be a tough, hard summer, Northern Hemisphere summer for all traders.
I have one final question, Peter, and this is about on what percentage possibility would you see that the crude prices can go down yet again? You have given a support at $16, but that means we are basically going into teens again. But a single digit, a negative pricing, while the markets are better prepared this time around than what we were in the previous month, but what is the possibility in a percentage sense?
Well, it'd have to be... that's like going to the tables in Vegas. I reckon you've probably got to be looking at 40 to 50% chance. It's nearly equal money, I reckon, that it can go down to single digits. I'm not suggesting you're going to see negative, but I feel as though that there's going to be a lot of volatility over the next couple of days, and there's every chance you may see single digits, Manisha. I don't know what that number's going to be, and I don't think any trader does, but I feel as though that there's enough uncertainty to create that.